Welcome back to New Money. This evening we're discussing estate planning. My guests Tony Davey and Gordon Stewart. If you'd like to email us, you can send your query to info@anchorcapital.co.za. Gordon, just finish with a question about the income, question about income for residents and non-residents from a trust. Is that dealt with differently?
Bryan. So let's have a look. Capital gains, a capital gain that was distributed to a non-resident was always taxed in the trust at the trust's tax rate. Income, on the other hand, was treated differently. So I believe that in the Taxation Laws Amendment Bill that came out recently, that effective from March 2024, the conduit principle is no longer going to apply when income is distributed to a non-South African tax resident. So in other words, income and gains will now be treated in the same way when distributed to a non-resident, to the extent that it'll actually be taxed in the trust.
Tony, any comments you'd like to make on the questions I spoke to? I mean, we do play around with that trust. I mean, we certainly, people form a trust, they ask a couple of friends, will you be trustees? And then everyone just signs resolutions, if they even do resolutions. What is the way forward now for South African trusts? Is it going to be more stringent? Are trusts going to have an independent trustee? Do they have to be audited? Does every trust have to be audited? What is the position?
Bryan, just to build on Gordon's point, this is the Financial Action Task Force, FATF, have obviously put us on this grey list, and they are requiring far more transparency regarding trusts. So in fact, there is a portal, which is the Masters portal, where you as a trustee now have to upload information to the Master's office, this is captured, believe it or not, electronically, to show beneficial ownership of all persons associated with trusts. So that would include the trustees, in other words, who you are, where you are, so ID, proof of address. And the bone of contention is that it applies to all trust beneficiaries, even those beneficiaries who are discretionary beneficiaries. So they may or may not get any award, and they don't have what we call vested rights. But you still, every single person in a trust deed who's a potential beneficiary, what we'd call discretionary, their information in terms of know your client has to be uploaded to this portal. So that in itself is much more onerous.
Yes, children, wherever they may be.
Yes. Yes.
And then, so you provide all that information.
You've got to provide that on a portal.
And then a new child comes along, a new grandchild.
Well, then you've got to add them on. So it includes, the whole point is that, the argument is that there is no beneficial ownership. There's only a hope or an expectation of an award. So how can they be regarded as beneficial owners? So technically in law, they're not beneficial owners. But from the point of view of reporting, it is a requirement that even discretionary beneficiaries be uploaded. So the point is, it's far more onerous. And so far as audits go...
And if you don't, Tony, before you get to the audit, and if you don't give that...
If you don't do that, well, there are actually criminal sanctions, fines and things like that.
Against whom?
The trustees, because trustees manage the trust. Yeah, so it's against the trustees. So the point is, if your neighbor asks you to be a trustee, do you want to take on this onerous task? Because the issue is that you now incur criminal sanctions if you don't make sure this trust is run properly in the sense of, for example, the reporting requirements.
And when does this have to be done by?
Well, existing trusts should already have had the information submitted via the Masters portal. In practice, it seems they are informally granting, an extension. I haven't heard of anyone who's been threatened yet with sanctions, but ASAP.
Okay, and then the question about auditing?
The audit, there's two aspects to this. The Trust Property Control Act itself, which governs the administrative side of trusts, does not require an audit. Okay, so it's not necessary. So it depends, therefore, on the wording of the trust deed. If the trust deed says you require an audit, then you would require one. Most trust deeds just say financial statements must be prepared, which means it can be prepared by an accountant who's not an auditor. So that hasn't changed.
But many people may not even be doing an audit or financial statements.
They're probably not. But again, as I say, these trusts are going to be monitored more closely going forward. So think twice before you just come on as a third trustee. Yeah.
Gordon, you wanted to make some comments?
No, I agree entirely with what Tony has said there. Look, everything is, well, a lot is determined by the wording in the trust deed. If a trustee does require the trust to be audited, then it has to be. But that's a little bit of overkill, and I don't believe that it's necessary. And the trustees must be able to show and that they have an understanding as to what the assets are, where the assets are, etc.
And many trustees wouldn't know that information, and many people wouldn't even know if that word audit is in the trust deed, because they probably haven't read the trust deed. Tony, let's just talk about Ponzi scheme, bank frauds. Can you write that? I mean, is that a deductible amount from a capital gain?
Yes, look, Bryan, there's been a few, of these schemes which have just blown up recently. If you are an investor and you have suffered loss, as a general statement, yes, you can claim a capital loss, not a revenue loss.
Capital.
But you can claim a loss, and which can be set off against gains. And if there aren't enough gains in the year, then obviously that loss can be carried forward. There's always the issue
Could that
of
also
proof.
be included for a bank fraud?
It can be any kind of, it can be a loss because of any kind of fraud, basically, all right? The issue is obviously the onus of proof in terms of confirming your loss is always on the taxpayer, in other words, the investor who suffered the loss. And SARS have put out an interpretation note a couple of years ago, just indicating, for example, what proof would be required. An obvious thing would be reporting this to the police station, okay, in terms of a criminal offence. It would be fraud in this case. Another example is putting in a claim if you did have insurance, like PR cover and things, and that gets repudiated, for example. So, but at the least you'd need some kind of fraud case number, and you would then claim it in those circumstances. Yes.
Well, I'm going to try and get as many emails as I can. I'm sorry to our viewers if we didn't get your email. I will answer some of your emails offline. I'll also ask Tony and Gordon maybe to also answer one or two. But Dean in Van der Bell says, how does the new draft marriage bill, in which it is proposed to recognise all types of intermediate partnerships and all forms of custom marriage, impact on estate duty and in maintenance if the relationship does not survive? This one's for you, Tony.
Bryan, the Constitutional Court ruled a couple of weeks ago that persons who married out of community of property, all right, should be able to claim from a spouse in the event of divorce or death, notwithstanding that you are not married by the accrual system. Because remember, in '84 the accrual system came about, and that actually effectively provides for automatic relief in the event of a dissolution of the marriage. The one party with a lesser accrual claim can claim from the other party in the event of death or divorce. But the issue is you could be married out of community of property without accrual, and therefore a party could be left with no claim and destitute. So the Constitutional Court has now said that's not constitutional, it's not fair, it's not equitable. And even if you married without the accrual system, in the event of a dissolution of the marriage, you now would be entitled to a claim. But I want to make the point that it's still quite complex, because under the accrual system, what's your gain since the commencement of the marriage, what's mine, all right? And you can do an arithmetic calculation. If you married without accrual, then you would apply to the court, all right, for what's called a redistribution of assets. So it's not an arithmetic calculation. The judge basically has to take into account various factors. So it's not automatic. You've got to specifically apply for it, but at least you can. And the judge would then take into account various factors. For example, if you were a stay-at-home spouse, you still indirectly made a contribution, all right? And you would therefore have to motivate it. So it's, although redistribution of assets is allowed, it's still a lengthy matter subject to proving your claim. Yeah.
Well, Gordon, I'm sorry we couldn't get to any of the emails, because, just ran out of time. But ever since grey listing, the Master's Office now requires new reporting obligations. Technically, there are many trusts which may in breach of the financial intelligence law. South Africans have been very lax in the way they manage their trust. Please consult with your tax practitioner. You may even communicate directly with Gordon and Tony to ensure that going forward your trust is correctly structured and managed. Tony, Gordon, thank you for joining me this evening. It's important to note that our program is to provide information and should not be construed as advice. Next week's program we will be dealing with investments, and if you need to get hold of me, my details will appear on the screen. I'd like to thank you for watching, and good night.